GST, one country one tax. In a nutshell, biological dip, there are two types of taxes levied in India: direct taxes, and indirect taxes.
Direct taxes, which is collected by central government of India, such as corporate tax, capital gain tax, personal income tax, securities transaction tax and many more. Other one is indirect taxes. Indirect taxation in the Indian Republic is a complex procedure that involves laws and regulation, interconnected to each other.
These regulation even include some laws specific to some states of the country: custom duty, excise duty, sales tax, service tax, value-added tax, entry tax and many more. Now, what is good and services tax? GST is a new indirect taxation system where there is a single tax in the economy for goods and services. One country, one tax.
GST is believed to streamline the indirect taxation system as it contains all indirect taxes levied on goods and in services, including central and state-level tax.
It will be collected on value-added goods and services at each stage of sale or purchase in the supply chain by tax credit mechanism.
But why GST? France being the first country to introduce GST in 1954, almost 140 have introduced GST system.
World Bank experts say that GST may improve tax collections and boost India's economic development by breaking tax barriers between states.
Further motives behind GST? Reduce the cascading effects of taxes on taxes. Thus final consumer will bear only the GST charged by last dealer in the supply chain. Increase productivity and transparency. Increase tax GDP ratio. Reduce or eliminate tax evasion and corruption.
Disclaimer. As a measure of support for the states, petroleum, tobacco and alcohol for human consumption have been kept out of the purview of the GST.
Implications of GST on imports and exports. Imports would be subject to GST. Export, however, will be zero-rated, meaning exporters need not to pay GST on their export. What is Delhi discussing on GST? The Congress wants the GST to be capped at 18%. It wants the upper limit to be listed in the constitutional amendment.
It also wants the removal of proposed 1% state levy, and it has called for a powerful council to settle disputes on revenue sharing between state and center government. However, union government has also indicated that it is willing to accommodate most of those changes. But it points out that specifying a tax rate in the constitutional amendment is inadvisable, as that would require changing the constitution each time the rate is to be revised. Thank you. Become a fan, a subscriber, a follower. Pick your favorite social network.